Welcome back to Revise and Resubmit, the podcast that takes, those really dense academic papers and makes them surprisingly interesting. I'm Pavlov.
And I'm Nikita. Today, we're going to be diving into something pretty fascinating, I think.
Yeah.
We're going to be looking at how, big dramatic events like hurricanes, can actually impact how investors make decisions, especially when it comes to, the environment and things like that.
Interesting.
So the jumping off point for this whole deep dive is this really cool study.
Okay.
It's called Do Salient Climatic Risks Affect Shareholder Voting?
Okay.
And it's by these two researchers, Fich and Xu, from 2025. Mm-hmm. And basically what they did was they looked at these institutional investors.
Okay.
It's like mutual funds, the big guys.
Right.
And how they vote on different company proposals and stuff.
Yeah.
But specifically after a major hurricane has hit.
So would living through a hurricane make you more likely to want to vote?
Yeah.
Yeah, on environmental proposals.
Yeah, exactly.
Interesting.
So that's kind of the big question here. And they looked at a ton of data.
Okay.
350,000 votes.
Wow. Which is crazy. Yeah. And what they found is that experiencing a hurricane does seem to correlate with pretty noticeable increase in pro-environmental voting.
Yeah. Interesting.
So mutual funds that were located in areas that got hit by hurricanes, they were way more likely to vote yes on these pro-environment proposals.
Yeah.
Especially in the months right after a storm.
Oh, wow. So immediately after.
Yeah. The effect was strongest right after the hurricane.
Oh.
And here's the thing that I thought was really interesting.
What's that?
They found this pattern even for funds that had never supported these kinds of things before.
Never, they had consistently voted against it, and then...
Yeah, and then all of a sudden hurricane hits, and they're like, wait a minute.
Wow.
Maybe we should be thinking about this stuff.
Yeah, that's wild. So, it's almost like the hurricane, flips a switch or something.
Yeah, it's like they become environmental funds,
Yeah, temporarily at least. At least for a little while.
Oh.
So to kind of put it in perspective,
okay,
the magnitude of this change is the difference between someone who's a diehard environmentalist.
Oh, wow.
And someone who never even recycles,
Okay.
It's a pretty big difference.
Yeah, huge. Yeah. So
it's a big swing.
It's a really big swing.
Yeah.
And the other thing that's important to note here is that the study was specifically looking at proposals for companies that were outside of the hurricane zone.
Oh, so it wasn't even their own investments that were being...
No, it wasn't self-preservation or anything.
Interesting.
It was a broader shift in how they were thinking about climate risk.
Okay, yeah, that makes sense.
Yeah, so it wasn't just about protecting their own assets.
Wow. So they're seeing this hurricane happen and they're oh, this climate change thing is real.
It's a wake-up call kind of.
Yeah.
Yeah.
Wow.
So then the big question is why?
Yeah, why the change?
Yeah, what's actually driving this?
Right.
Is it a real, genuine change of heart? Mm-hmm. Or is it something else?
Yeah, is it they're just trying to save their jobs or something?
Yeah, exactly. So that's what the researchers dug into, and this is where it gets even more interesting.
Okay, I'm hooked.
They wanted to know, okay, is this change coming from the fund managers themselves?
Right.
Did the hurricane, personally change their views?
Yeah.
Or is it more about, career pressures?
Yeah.
Oh,
if their investors are freaking out.
Yeah, if all of a sudden all their investors are oh my God, climate change.
Right, we need to do something.
We got to do something about this.
Right.
Then the fund managers are oh crap.
Gotta get on board.
I better start voting this way,
Yeah, to keep my job.
Exactly.
Oh, interesting.
So are you talking about genuine environmental conviction here? Mm-hmm. Or are we talking about follow the leader?
Yeah, that's a good question.
So the researchers were really smart about how they figured this out.
Oh, how'd they do that? Well, they looked at a bunch of different things.
Okay.
But one of the things they did was they compared the voting patterns of Democratic-leaning managers to Republican-leaning managers.
Oh, interesting.
Because, political affiliation can often kind of line up with views on climate change.
Totally.
And then they also looked at how stock performance had been impacted by similar proposals in the past.
Okay.
Because you'd think if a manager saw a company's stock tank after passing a pro-environmental proposal,
right,
they might be a little hesitant.
Yeah, a little gun shy.
To support those kinds of things again.
Yeah, for sure.
Right.
So what'd they find?
So what they found is really interesting.
Okay, lay it on me.
It actually provides evidence for both explanations.
Ooh. So both?
Yeah, like a little bit of both.
Wow. Okay.
Yeah. So let's dive into that a little bit.
Okay, let's break it down.
So on one hand, they found that like Democratic-leaning managers, they showed a way stronger pro-environment shift after a hurricane compared to Republican-leaning ones.
Okay, so that kind of suggests that like personal beliefs do matter.
Yeah, exactly. Like it's not just about like, following in the herd or whatever. Yeah. But then on the other hand, they also found that even managers who had seen like negative financial impacts from these kinds of proposals in the past, they still increased their support for environmental stuff after a hurricane.
Really?
Yeah, like even if they had seen a company's stock go down after like passing a similar proposal, they were still more likely to vote yes after a hurricane.
So it's like they're prioritizing what they see as like the greater good.
Yeah.
Over like potential losses.
Yeah, exactly. Right. So they're willing to take a hit if they think it's going to like help the environment.
Huh. That's fascinating.
Yeah. So it's not just about like, appeasing investors or whatever.
Yeah.
It seems like there's something else going on.
Yeah, like a real shift in perception.
Yeah, exactly.
Wow.
And to make things even more interesting, they also looked at funds that had like a primarily local investor base.
Okay.
So like people who are more likely to have been impacted by the same hurricane.
Oh, like a shared experience kind of thing?
Yeah, exactly.
Interesting.
And guess what? Those funds showed the biggest shift towards pro-environmental voting.
Really?
Yeah, it was like the most dramatic.
Wow, so it's like they're all in it together.
Yeah, it's like a community thing almost. Like they've all gone through this together.
Yeah.
And they're like, okay, we need to take this seriously.
Wow.
Yeah, so it's not just like numbers on a spreadsheet.
Right.
These are like real people making decisions based on like what they've lived through, you know?
Totally.
And that's what I think is so fascinating about this.
Yeah, it's like the human element of investing.
Exactly. Right. But here's the thing.
What's that?
The study didn't just stop at like voting intentions.
Okay.
They went a step further and looked at how these shifts in perception actually translated into like real investment decisions.
Oh, so like they actually put their money where their mouth is?
Yeah, exactly.
Okay.
Like, are they just voting green?
Yeah.
Or are they actually like putting your money behind it?
Right.
And what they found is that funds that were hit by hurricanes were actually more likely to buy shares.
Okay.
In companies where their vote could like make a difference.
Oh, so they're not just voting, they're like strategically investing.
Yeah, exactly.
Wow.
Like they're actually trying to make an impact.
Yeah. That's pretty cool.
Yeah, it's not just like passive voting anymore.
Right.
It's like they're actively using their investments to try to like push for change.
Yeah, like they're using their power.
Yeah, exactly.
Wow.
And this was especially true for like long-term investors.
Okay.
So the ones who are like less focused on like immediate gains and more interested in like sustainable growth, which suggests that they really believe in this stuff.
Yeah, like they're in it for the long haul.
Yeah, exactly.
Huh.
And that's what I think is so powerful about this research.
Yeah.
It's not just theory anymore. It's like real world evidence.
Yeah.
Of how like a shift in perception can actually lead to like tangible financial decisions.
That's pretty amazing.
Yeah.
So like if a hurricane can influence these like big time investors, how much do you think our own experiences like shape how we see the world?
Good question.
You know, and the choices we make and stuff?
It really makes you think.
It does. But there's another side to this story we need to talk about.
Oh, okay. What's that?
There's a potential downside to all this.
Okay, so we're seeing these funds making decisions that are like, you know, more aligned with being aware of climate risk.
Yeah.
But what's the downside?
Well, it turns out that the companies that were being targeted by these pro-environmental proposals, they often experienced lower stock returns in the short term.
Really?
Yeah. And they even face more negative forecasts from analysts.
Huh. That's interesting.
Yeah.
You'd think that companies embracing sustainable practices would be like...
You'd think so.
Rewarded by the market.
Yeah.
But it seems like that's not always the case.
Right. At least not right away.
Yeah.
Yeah. It suggests that like this push for environmental action that's spurred by a hurricane.
Yeah.
Might not always align with what's considered like financially optimal.
Right.
In the short term, at least.
Yeah.
It's tricky.
It's a really tough question.
Yeah.
Like, how do you balance doing what's good for the planet with what's good for like the bottom line?
Exactly.
That's a really complex issue.
It is. And it makes you wonder if these investors are like maybe overreacting to the hurricane experience.
Okay.
You know, like pushing for changes that might not actually be in the company's best interest.
In the long run.
Yeah.
That's a really good point.
Yeah. Something to think about.
So it's fascinating how like one single event, like a hurricane, can have such a ripple effect.
Right.
You know, influencing not just like how people think, but also like their actual financial decisions.
Yeah, it's really powerful.
It's amazing.
Yeah, this study has been great.
Yeah, it's been really insightful.
Like seeing how personal experience can really shape investing.
Yeah, even for like seasoned professionals. That's crazy.
It is. And it shows how important it is to like really think critically about our investments and, you know, be aware of our own biases.
Totally.
And think about the long-term consequences of our actions.
Yeah. So for everyone listening, what do you think the big takeaway is here?
Well, I think the biggest thing is that our experiences matter.
Yeah.
Like they really shape how we see the world and what we care about.
Yeah.
And the choices we make. And these experiences, like especially powerful ones like natural disasters, they can influence us in ways that we might not even realize.
It's a good reminder to like examine why we believe what we believe.
Totally.
It's easy to just like go with the flow.
Yeah.
But it's important to like step back and think critically.
Yeah. And ask ourselves if our actions are actually lining up with our goals.
Yeah. Both like financially and in terms of like, you know, our impact on the planet.
Exactly.
Well, this has been another amazing deep dive.
It has.
We've learned so much.
Yeah, we've learned that even seasoned investors aren't immune to the influence of like personal experience, and that events like hurricanes can really change how people think and act, even in the financial world.
Exactly.
It's a complex and constantly changing landscape out there.
Yeah.
And studies like this one give us like really valuable insights into the forces that are shaping our decisions.
So as always, we encourage you to like check out the full study.
Yeah, we'll link it in the show notes.
Yeah, it's got a ton of fascinating details that we didn't have time to cover today.
It's really interesting.
Yeah, it might just make you think twice about the things that are influencing your own decisions.
It might.
Thanks for joining us on this deep dive.
Yeah, thanks for listening.
We'll catch you next time.
See ya.
Okay, so we're talking like evidence for both like a change of heart and maybe a little bit of, you know, trying to keep the investors happy. So like what did they actually find? Like how did they break this down?
Well, so on the one hand, they found that Democratic-leaning managers, they showed like a way stronger pro-environment shift after a hurricane.
Okay.
Compared to like Republican-leaning ones.
So that seems to suggest that like, you know, personal beliefs actually do play a role.
It's not just about, you know, like following the crowd or whatever.
Yeah, totally. But what about like the managers who had seen like negative financial impacts from similar proposals in the past? Like, did they just like stick to their guns, or did the hurricane like...
That's what's so interesting.
Yeah.
Even managers who had seen like stock prices drop after these kinds of proposals. They still increased their support for environmental stuff after a hurricane hit.
So even if they had seen a company's stock like tank after a similar proposal?
Yeah, like they're essentially saying like,
wow,
we think this is important enough to potentially take a hit.
Huh, that's wild.
Yeah, it's like they're putting the planet above profits in a way.
Yeah, it's like they're willing to take a short-term loss if they think it'll benefit like the environment in the long run.
Exactly.
So it's not just about like pleasing investors or like, you know, chasing the latest trend or whatever.
It seems like there's like a genuine shift in perception.
Yeah, totally. And then like to make things even more interesting, they also looked at funds that had like a mainly local investor base.
Oh, okay.
So like folks who are more likely to have experienced the same hurricane as the fund managers.
Oh, so they're all like in it together.
Yeah, it's like a shared experience kind of thing.
Interesting.
And guess what? Those funds showed the biggest shift towards pro-environmental voting.
Really?
Yeah, it was like the most dramatic.
So like the hurricane hits and they're all like, oh, wow.
Yeah.
We need to like rethink some things.
Yeah, it's like a wake-up call for the whole community. Like they're all in this together.
That's pretty powerful.
Yeah, it's not just like numbers on a spreadsheet anymore.
Right.
It's like real people
Yeah.
making decisions based on like their actual lived experiences.
Yeah, totally. But here's where it gets even more interesting.
Okay.
The study didn't just look at like voting intentions.
Okay.
They actually look at how these shifts in perception like translated into real investment decisions.
So they're not just like talking the talk.
Exactly.
They're walking the walk.
Yeah. Are they actually like putting their money where their mouth is?
Yeah, exactly.
Like, that's what I want to know.
So what they found is that funds that were hit by hurricanes, they were more likely to buy shares in companies where their vert could actually make a difference.
Oh, so they're like strategically targeting companies.
They're not just voting, they're like actively trying to shift the balance.
Yeah, that's pretty cool.
Yeah, it's like they're using their investments to try to like make a real impact.
Like they're using their power for good.
Exactly. Yeah. And this was especially true for like the long-term investors.
Okay.
You know, the ones who are like less focused on immediate gains and more interested in like sustainable growth and stuff.
But they're like really committed to this.
Yeah, it's like they actually believe in it.
That's awesome.
And that's what I think is so amazing about this research. It's like, it's not just theory anymore. It's like real world evidence that a shift in perception can actually lead to like tangible financial decisions.
That's huge.
Yeah, and it makes you wonder like, if a hurricane can influence these like sophisticated investors, how much do our own experiences shape like the way we see the world and the choices we make? And
it makes you think.
Yeah, it really does. But you know, there's another side to this story that we need to consider.
Oh, okay. What's that?
While the study found some like positive trends, you know, it also uncovered a potential downside. To this whole like hurricane-induced pro-environmental push.
Interesting. So, like, what are we talking about here?
Well, it turns out that passing these pro-environmental proposals, especially the ones that were, like, heavily supported by these hurricane-influenced investors, often led to lower stock returns for the company.
Really?
Yeah. And they even faced, like, more negative forecasts from analysts.
Huh. You'd think that companies embracing sustainable practices would be, like, rewarded by the market.
You would think.
But it seems like that's not always the case.
Yeah, at least not immediately.
Right.
And it kind of suggests that this push for environmental action might actually be like an overreaction driven by the recent hurricane, you know.
So, like, they're so focused on climate change after the hurricane that they might be making decisions that aren't actually in the company's best interest.
Exactly.
That's a tough one.
Yeah, it's like a really complex issue.
It is.
Like, how do you balance doing what's right for the planet with what's right for like the bottom line?
Yeah, it's a tough question.
Yeah, it's a really tough question. So we've got these funds, you know, they're making these decisions that seem to be like, you know, really focused on climate risk.
Right,
you know?
Trying to do the right thing.
Yeah, but you said there's a downside.
Yeah, so the thing is...
What is it?
The companies that are getting targeted by these like pro-environmental proposals, they're often seeing like lower stock returns.
Really?
Yeah. Like in the short term, at least. And they're even getting hit with like more negative forecasts from those analysts, you know?
So you'd think companies that are like, you know, embracing these sustainable practices.
Right, exactly.
Would be like rewarded by the market.
You'd think so.
But it's not always the case.
Not right away, it seems like.
Yeah, so what's that telling us?
Well, it might be that this big push for environmental action that everyone's so fired up about after the hurricane. It might not always be the best thing for the company financially.
At least not in the short term.
Yeah, and it makes you wonder, you know, are these investors kind of overreacting to the hurricane?
Oh, interesting.
Like maybe they're pushing for all these changes that sound good, but might not actually be the best for the company in the long run.
Yeah, like they're so focused on climate change now that they're not thinking about the other factors.
Right, exactly.
It's like they're just laser focused on this one thing.
Yeah, tunnel vision almost.
Wow, so it's a really complex issue.
It is, for sure.
Like, how do you balance doing what's good for the planet with what's good for the company financially?
Yeah, it's a tough one.
Really tough.
And there's no easy answer.
No, definitely not.
But it's definitely something worth thinking about.
Yeah, it really is.
So, you know, it's fascinating how, like, one single event...
Like a hurricane.
can have such a huge impact.
Totally.
Not just on how people think, but on their actual financial decisions.
And it's not just like everyday people either. We're talking about like seasoned investors here.
Yeah, appraise.
And they're still getting swayed by these events.
It's pretty wild when you think about it.
It really is.
It shows just how powerful personal experience can be.
Yeah, even when it comes to something like investing that you think would be all about like, you know,
logic and numbers.
Yeah, exactly.
But there's a human element to it too.
Totally.
And we can't ignore that.
So I think the big takeaway here is that we need to be aware of our own biases.
For sure.
And really think critically about the decisions we're making.
Especially when it comes to something as important as investing.
Yeah, and not just like what we're investing in, but why we're investing in it.
Exactly. Like what are our motivations?
Yeah. Are we just following the crowd?
Yeah.
Or are we actually like making decisions that are aligned with our own values?
And our long-term goals.
Yeah, exactly.
Both for ourselves and for the planet.
Well, this has been another incredible deep dive.
It has.
I've learned so much.
Me too.
It's amazing how these like seemingly unrelated things like hurricanes and investing are actually so interconnected. And how our own experiences can really shape our decisions.
It's all connected.
That really is.
Well, thanks for joining us on this journey.
Yeah, thanks for listening, everyone.
And be sure to check out the full study by Fich and Xu.
Yeah, we'll link it in the show notes.
It's got a ton of great information. And don't forget to subscribe to Revise and Resubmit on Spotify and Apple Podcasts for more captivating deep dives like this one. And if you're enjoying the show and want to support us in creating more insightful content, consider becoming a patron on Patreon. Every contribution helps us continue this journey of exploration and discovery. Until next time, keep those minds curious, keep questioning, and keep revising and resubmitting.